Hello. Thanks for joining us on Footprint Report, where we dive into the latest news and trends about tokens, projects, protocols, and more. In this video, we'll talk about Curve Finance, the largest decentralized exchange. The world of DeFi is no stranger to booms and busts. Will Curve continue to be dominant in the DEX category? And, which shortcomings should investors watch in the future? Today, we focus on 4 perspectives to get a deeper understanding of Curve. First, base introduction and data performance of Curve. Second, Curve's competitive advantages. Third, APY mechanism about Curve. Fourth, how to find popular pools on Curve. Part 1, Base Introduction and Data Performance. The Curve team started working on Curve in December 2019 and the product went live 1 month later. Curve's founder, Mikhail Egorov, a scientist from Russia, who founded New Cipher, a cryptocurrency venture that builds privacy-preserving infrastructure and protocols, in 2016 and serves as the project's CTO. Egorov is also the founder of LoanCoin, a decentralized banking and lending network. Thanks to the technical management of several crypto projects, Egorov's expertise makes Curve very advanced. Curve is a decentralized exchange focused on providing efficient stablecoin exchange services. Although Curve went live in January 2020, the real push to make Curve known to the public was the launch of Curve's native token, CRV, in August 2020. Curve deployed on 7 public chains, TVL tops $21 billion. And ranking number 1 in DEX sector. Why is Curve such a competitive project? Here are 4 reasons, based on the data. First, low slippage and competitive trading fees. Curve introduced an upgraded version of the formula called StableSwap, based on the Uniswap AMM constant product formula. This not only keeps the slippage low enough, but also increases the competitiveness of trading fees. Curve's current fee of 0.04% is about 1/10 of Uniswap's. The second reason, Curve currently has its application deployed on 7 networks and offer more than 100 pools. The third reason, investors can get more than 3 forms of APY from Curve: base APY, reward APY and increased APY. This multi-APY mechanism that encourages investors to deposit more funds has been widely used in already other platforms offering similar services since it first appeared in Curve. The fourth reason is the virtuous cycle of Curve's DAO. Curve's project governance, or DAO, uses CRV, reward tokens, and vecrv, governance tokens, to positively stimulate and connect investors, agreement parties, and the Curve project itself. For the investor, the APY mechanism will encourage him to deposit more stablecoins and stake more CRV, instead of selling, for more CRV rewards. Pools with a high reward rate are attractive. For the protocol, it needs a higher voting power to provide an appealing reward rate, which leads to a higher demand of buying CRV in the open market. For Curve itself, 2 things are more important: the amount of total value locked on its platform, and the increasing price of CRV. These 2 goals can be met by introducing more pools, appealing rewards, better control of the CRV price. Now we learned how Curve has stimulated investors to deposit more money by adopting an attractive APY mechanism. This mechanism is one of the highlights of Curve's consistently high TVL growth rate. Let's continue with how investors earn APY inside and outside Curve, and the motivation behind the DEX's mechanism. The first way to earn APY is interact through the Curve pools. Take Curve's 3 pool as the illustrative example. In the process of converting a stablecoin in the 3 pool, the trader pays a transaction fee of 0.04%, of which 50% goes to Curve. The remaining 50% will be given to the investor as APY base reward, or more precisely, the liquidity provider of the 3 pool. For the investor, once he deposits one of the coins DAI, USDC or USDT into the 3 pool, Curve will perform an automatic conversion, exchanging the deposited stablecoin into a combination of the 3 proportionally. In return, the investor will receive 3 pool CRV as an LP token, meaning that the holder of this token will receive VAPY as a base reward for investing in the pool. Curve's APY mechanism encourages investors to activate the 3 pool CRV in their wallets, in the way that depositing this LP token into the 3 pools gauge. This investor will be rewarded with CRV in accordance with the allocated share of the pool. If the investor wants to boost his reward rate, he can withdraw the rewarded CRV and deposit it back into the CRV gauge. This staking action allows the investor to receive not only an increase factor, but also Curve's governance token vecrv. Second way to earn APY is interact via protocols beyond Curve. This is an example where investors stake token by staking in different pools of Curve in order to get different rewards. Investors can keep staking the reward token they get after staking again and again, one after another, and finally get multiple APYs. Perhaps you have understood how these tokens are an incentive between different protocols. The next section will explain the breakdown of Curve's DAO model and dig further into how the interactions between Curve participants meet their respective needs through incentives. Let's think about this. Who needs all these vecrv tokens? The answer is, the protocol parties are the largest demanders of vecrv, because of Curve's current high APY and active trading attracts protocols to create pools at Curve. If they want to create a pool, they have to keep staking CRV and earning vecrv to get votes, launch pools, and get higher CRV APY. Simply summarized, the more people trade, the higher the APY. Also, the more people invest, the more protocol parties are attracted to open pools. The more staked CRV, the more competitive APY, the more stable token price of CRV, and the higher TVL. This cycle all leads more people and protocol parties to choose Curve for trading, investing and opening pools. In the last part, after we learned about Curve's APY and DAO mechanism, we tried to summarize 4 features to help us find the most popular pools. High volume. The more trading activities, the higher base VP. Supported by solid platforms, such as Compound, Aave, etc. More voting power from Gauge stats. Extra rewards, such as SUSD. That's all for today. If you like this video and want to find out more about footprint reports, then watch our recent video on footprint reports, linked below. If you're feeling bullish on Learn DeFi with Footprint, hit that like button and subscribe. Check out our other content, and get one step closer to blockchain analytics.